You don't need $10,000 to start investing. You don't need to understand the stock market. You don't even need to know what a brokerage is. You need $100 and a phone. And by the end of this video, you're going to know exactly what to do with both. The number one reason people in their 20s aren't investing isn't that they don't care. It's that they think they don't have enough money to start. They're waiting until they have a real amount. $1,000, $5,000, whatever feels legitimate. And while they wait, the market keeps going up without them. Here's the truth. There is no minimum. Not anymore. A decade ago, investing with $100 was genuinely hard. Stocks cost too much per share. Brokerages had account minimums, and the fees ate your returns. None of that is true today. You can open an investment account in about 10 minutes, deposit $100, and own a piece of hundreds of companies by the end of the day. The barrier to entry is basically gone. The only thing left is deciding to start. Step 1. Pick the right app. This is where most beginners overthink it. You don't need the best app. You need a good app that you'll actually use. For starting with $100, there are 3 solid options. Robinhood is the easiest entry point. The interface is clean, there's no minimum deposit, and it's built for people who are new to this. Fidelity is the more serious option. No minimums, no fees, and a reputation that's been around for decades. Acorns is the most hands-off. It rounds up your everyday purchases and invests the spare change automatically, which is great if you want investing to happen in the background without thinking about it. Any of these work. Pick one, download it, and create an account. Don't spend 2 weeks researching which one is best. The difference between them matters far less than the difference between starting and not starting. Step 2. Understand fractional shares. This is the piece that changes everything for small investors, and almost nobody talks about it. Some stocks are expensive. One share of Amazon or Google can cost over $100 on its own. A decade ago, $100 meant you couldn't afford a single share of most major companies. Now almost every major investing app offers fractional shares, meaning you can buy a slice of a share for whatever amount you have. Put in $100 and want to own Amazon? You don't need $180 for a full share. You can buy $100 worth and own a fraction of one. You get the same price movement, the same gains, the same exposure. You just own a smaller piece. This matters because it means $100 gives you access to literally anything in the market. You're not limited to cheap stocks. You can invest in exactly what you want in any amount. Step 3. Buy something boring. Here's where most beginners go wrong. They get their first $100 into an account and immediately want to buy something exciting. A stock they heard about, a company they use, something their friend mentioned. That's how $100 turns into $60. The right move with your first $100 is to buy something boring. A broad market fund that owns a little piece of hundreds of companies at once. We've done a full video on how these work. Link in the description. But the short version is, instead of betting on one company, you're betting on the overall market. Historically, that's been the winning bet over long periods of time. Search for a fund that tracks the S&P 500 in whichever app you chose. Put your $100 in, and then leave it alone. Here's what most people don't realize about starting small. $100 a month invested at an average 8% return. That's it, just $100 a month. Becomes over $350,000 in 40 years. Not because $100 is a lot of money, because time is. The people who retire with money aren't the ones who invested the most. They're the ones who started the earliest. $100 today is worth more than $1,000 10 years from now. That's not motivation, that's math. Step 4, make it automatic. One deposit of $100 is a good start. But the real power comes from doing it every month without thinking about it. Every app we mentioned has an automatic investment feature. You set a date, let's say the 1st of every month, and a fixed amount, and it pulls from your bank account and invests it automatically. You never have to remember, you never have to decide, and you never have the chance to talk yourself out of it. This strategy has a name: dollar cost averaging. It means you're buying at different prices every month. Sometimes the market is up, sometimes it's down, but you're buying consistently either way. Over time, this smooths out the volatility and means you're not trying to time the market, which nobody, including professional investors, can do reliably. Set it up once, then forget about it. Check back in 6 months and the account will look different than when you left it. Now here's what not to do with your first $100. A few things that seem tempting and aren't. Don't buy individual stocks with your first investment. One company can go to zero. Hundreds of companies almost never all go to zero at the same time. Stick with funds until you have a solid base built. Don't put it into crypto. Crypto is a separate conversation. We'll cover it in a future video. But it's not where your first investing dollars should go. The volatility is too high, and the downside risk on a small account is brutal. Don't check the account every day. Seriously. The market goes up and down constantly, and watching it daily will either make you panic sell at the wrong time or become obsessed with short-term moves that don't matter for your long-term goal. Check it once a month, max. The only thing that actually matters. You can optimize forever. The perfect app, the perfect fund, the perfect amount. Or you can start today with whatever you have and let time do the work. The version of you in 20 years isn't going to care whether you used Robinhood or Fidelity. They're going to care whether you started. Every month you wait is a month of growth you don't get back. $100. Today. That's the move. If this finally made investing feel doable, subscribe. We break down money topics like this every week, and drop a comment with whatever money question is on your mind. We read all of them, and it might just become the next video.